The Australian dollar has been one of the best performing major currencies over the last 12 months. Since we made the low last year in April, we've seen strong performance in the Australian dollar against all of the other major currencies, particularly towards the end of last year and into the beginning of 2026. A lot of momentum to the upside. As we go down and take a look at a few of the other Aussie pairs, we can see Aussie Kiwi, strong momentum to the upside, nice uptrend. Aussie CAD, very similar. Aussie Yen, strong uptrending market, benefiting as well with the weakness in Yen. Aussie Swiss, less strength, but we still see that momentum to the upside. And then inversely, looking at Euro Aussie, that Aussie strength helping to drive Euro Aussie down, and the same with Pound Aussie. My name is Ray Gilmour, and in this video, I'm going to take you through why I think this strength we have seen in the Australian dollar is coming to an end, and which pairs you should be targeting to capitalize on this change of fortunes. I want to start first of all by looking at the price action on the chart. We'll start with the Aussie dollar chart yourself, and you can see there's been a lot of momentum from the initial breakout from the range back in November. A lot of momentum to the upside, a little bit of a pause, again a lot of momentum, nice little retracement, but you can see price action is getting weaker up here. This retracement still looks fairly stable in terms of a nice phase 2, but it's quite long lasting, and we're not seeing buyers wanting to come in there and see that momentum kick in like you'd expect to see in a strong uptrend. So we are seeing weakness in there. But what I want to draw your attention to is what's happening under the surface. I want to take you over to the commitment of traders data that we have for the Australian dollar. And the really interesting thing here is understanding what is happening behind the scenes, what traders are actually doing, where is the money flowing in this market. To do that, I'm just going to go out, show you a little bit of context historically. Go back over his last 15 years. The two main groups we're looking at here, we have commercial traders and non-commercial traders active in the market. We could look at non-reportable as well, but the two main groups I want to focus on are here. And I want to particularly isolate commercial shorts and non-commercial longs. Focusing on non-commercial longs, your non-commercials, your hedge funds, your big institutions, speculators in the market trying to profit from getting the direction of a market correct. We've seen a lot of buying from the breakout that we've had here towards the end of last year. So they've been right, a lot of momentum to the upside. They've definitely made money here, a lot of buying. But the thing I want to draw your attention to is the level of buying that we're now at. The amount of buying they are doing here. We've got 120,000, almost 120,000 long contracts. We look back historically at the level of buying that is typically associated with tops in the market. You can see these highs coming in. And just for reference, this is a weekly chart at the top. So some of these might not look like much of a downtrend, but you're still looking at 8, 9, 10 weeks of a move to the downside. So there's a lot of momentum to the downside in there. And then a lot of buying we had in this area. And that's whenever we've had the major top back here in 2013. So you can see from the positioning, yes, from the breakout, a lot of momentum, a lot of money flowing in on the long side from the lows here back in November. But we're now getting to the point that we would typically associate with a major top exhaustion in buyers, running out of buyers, nobody to carry on the baton to keep driving this market higher. And if the market starts to roll over, this group will be forced to cover those longs and exit, and you'll see quite a sharp move to the downside. The other group of interest here are commercials, and they use the market for hedging purposes, and they hedge against where they see the market going, hedge against future prices and how it would impact their bottom line. And they operate very differently. As market has been moving to the upside, they will be selling that market, locking in that price. And you can see now they've reached the level that we have here, almost 160,000 short contracts. And when they're hedging heavily for an anticipation of that move to the downside, again, it's the opposite of when the non-commercials are heavily long. The commercials are typically heavily short, hedging for that next move to the downside. And you go back into these areas whenever the two groups are at their extremes. Commercials heavily short, non-commercials heavily long. That is when we get extremes in the market and major turning points and changes of trend. And we're in that area now at the location we are. There's a nice level of resistance coming through here for the Aussie dollar. And we've got extremes in position that we typically associate with major tops in the market. So heavy commercial shorting, heavy non-commercial buying, both symptoms of a major market top. What the positioning doesn't tell us is when Aussie could start to see that weakness actually kick in and start to see that momentum to the downside, that is when we could start to take a look at seasonal patterns and try to understand what is the behavior when we could actually see that weakness in the Aussie. I'll start with Aussie dollar here. And we're looking at a seasonal chart for the Australian dollar versus the US dollar. This is the 20-year average in the orange line. The yellow line is current price. You can see this year how we've started since the 1st of January. And you can see we're actually not following the historical pattern. You can see price action racing to the upside, when historically Aussie actually would typically be down through this period. So looking historically, using the historical seasonal average isn't going to be of much use to us here at this point in time. There's not much particularly strong correlation between current price and historical patterns. But what we can do is start to dig a little bit deeper and look for hidden patterns. Try to understand what's going on here with Aussie. Have we done this before? And if so, what does it look like then moving forward? There's a couple of things we can do here. First thing we can do is actually look historically. Actually, Aussie is down through January, through this period, and we've seen a lot of momentum to the upside through the start of the year. So we can actually start to break down and try to see what does Aussie look like when it started the year well, and we've seen strong performance to the upside in January in particular. And you can actually see we do typically start to see a top in February and see that momentum to the downside kicking in as we're heading through the end of February into March. So that's interesting. Another thing we can do here is go a little bit deeper and actually ask the software, show me only the years that are most closely aligned with what we're currently doing. And we can do that by using TruePath. You can see here it just matches, only looks for years that are aligned with current price action. And it's very similar to that positive January pattern, but it gets us a little bit more aligned. You can see the custom pattern here. So we've got a correlation now with price to the pattern, 91%, so very strong positive correlation. It does show we have had quite a few years where we've had this momentum and this strength in Aussie to the upside through January into February. And it is showing the top in around this area towards the second half of February, and then that weakness kicking in as we head into March and running through March, and potentially then seeing a bit of a bounce as we get towards the end of the month. It's picked up a pattern here. That period down to the downside through March has been a 73% success rate in terms of that momentum, and that move to the downside actually being negative through that period and during these years that it has picked up. And you can see historically there's been a couple of up years through that period, but generally there's been a lot of momentum to the downside in years that match what we're currently doing, which is really, really interesting. Digging a little bit deeper into this, we can actually go and take a look at all other Aussie pairs and start to look at the same way, ask the software, show me only years that match what Aussie is currently doing. So this is the Australian versus the Canadian dollar this time. And again, it also shows a similar pattern at the moment, potential peak in here and actually moving to the downside, going down through a few others. Quite interested in Euro Aussie. And again, not following the typical pattern, the normal pattern. But if we dig a little bit deeper, show me only years that match what we're currently doing. Again, it does show whenever years start really, really bearish to the downside, a lot of momentum to the downside. There are years where that has happened in the past. And what has happened thereafter is we actually have seen Euro Aussie bottoming out and start to move to the upside. It's taken a bit of time to actually see that upside momentum, but it does suggest we don't continue in the same trajectory as we are moving at the moment to the downside. Another one I'll just bring up, and the interesting thing, we keep doing this, it keeps showing a very similar picture. Again, we're not following the historical norms, but if we use the advanced tools within the software, try to find out what the market is doing. Here we find for this time the British pound against the Australian dollar also suggests we're quite near a low. We should be bearish in these years down through this period in time. And as we get into March, we typically see this move to the upside. So there's a lot of markets, a lot of major pairs against the Australian dollar suggesting we're near the end of that strength for the Aussie and potentially about to see some reversals. And the fact that we can see the positioning that we have in the Australian dollar, where we've got this extremes in commercial shorts, the non-commercial long, that indicates to us that we are in an area for a major high in this market. What do we do from here? We go back onto the chart. The first thing we do is be wary in any further longs. If you are long, we are still in an uptrend in this market. From these lows, nice momentum to the upside. To say the trend is getting a little bit weaker, but we are still very much in an uptrend. So the first thing we want to do is obviously manage whatever longs that we currently have, but you don't want to be shelling instantly because going against the trend. Timing wise, we could see a little bit further spike to the upside, maybe get a double top in this area and then see us break to the downside. So I'd just be wary of getting short too early. Or the worst place to be short is pretty much in where we currently are, running in towards the 20 moving average you see here, where either you want to be early in a reversal in this kind of exhaustion, reversal, early signs of a reversal, or wait for that breakdown and actually look for the new trend to assert itself. So seeing a breakdown through the averages, maybe coming back in to retest this area and then seeing a move to the downside, actually looking to be short in through here. It's not a nice place to be. You're relying on the market pretty much to go in a straight line to try to give you an opportunity to get your stop loss to break even and take some profit out of this. So it's not a nice place to be short. But as I say, the fact that we are still in an uptrend, it's a case of managing longs and preparing to be on the short side. Not looking to be too early here. I'm looking for price action to confirm. I'll be looking for leaders on the other side of this. I'll be looking to see breaks to the upside, starting to take out previous highs or lows, depending on which pair we're in. You can see a potential double bottom in through here on Euro Aussie. We start to see some breaks up through these areas. I'd be looking to be long in this zone. I like Euro Aussie. Aussie Swiss is another potential through here, starting to see a break to the downside also, and Aussie dollar are the three that I'd be looking at. So it's just timing that. It's not trying to be the first seller in this market. It's having the awareness, this uptrend could, I think, have a little bit further upside in here. I think we could get a little bit higher. We could see a push up towards those previous highs and then look for a reversal of the downside from that point. Or I'm going to wait for a breakdown through that sort of 70 area, breakdown through that point. Then maybe a little bit being a bit more patient and looking for a retest into that zone and then a continuation to the downside through that point. So the data is definitely suggesting to us there's a major high is coming into the Australian dollar. It's at a nice level. It's a nice zone in there for a high. And the timing wise, there's a lot of really interesting patterns coming through, particularly from our through path, the feature in the seasonal software. So that is what the data is telling us at the moment. The charts, as we say, are still in an uptrend. So it's about primarily managing any existing longs and being ready for that trend change and trying to capitalize on the new trend that appears to be approaching to the downside. Hope that helps. By all means, check out any of the data yourself on the website. We have the Commitment to Traders data is there for many major markets. Same too on the seasonal software. Typical historical patterns that you might be familiar with, but advanced features in there as well that we can start to look for hidden patterns that not many people would actually be aware of.